Hello, bon dia, guten tag and namaste. Buongiorno, selamat pagi, bonjour and mahaba. Good day to you, trader. This is Mario from Forex Other Way, the channel for traders run by a trader. In this video, I'd like to share with you some ideas related to the application of moving averages you may use as a tool which helps to find symmetry of the market, which might be very helpful for you in finding dates when it is worth to open a position, or in the case that you've got an open position already and you should close it because the trend or the swing is going to the end. So let's start the rock and roll. "27 years ago, when I burned my first trading account, it was an option account on LIFE. That time there was the London Option and Future Exchange. I bought a book because I decided to learn something more about trading, because I was complete novice, a greenhorn as the Americans used to say. I paid £25 for it, or 25 quid, or a penny as the Londoners used to say. So I paid a penny for the book. There was a hell of money at that time when I was earning, well, how much was that? 50, 60 pounds a day. So I had to work 3 or 4 bloody hours to buy this trading manual for beginners. I don't even remember the title of the book. So I paid 25 quid for that book, where the only trading advice of value I found there was a golden cross and a death cross. Reading there, I discovered that the golden cross occurs when the faster moving average crosses the slower one. For example, when 50 moving average crosses above 200 moving average. That's the golden cross. As the opposite, death cross is when the faster moving average crosses below the slower MA. You should probably know that rule. But you know, later on I did realize when these two MAs cross, it very often happens that the main movement is over and there is not much left to trade, especially on the lower time frames, where I used to trade as every beginner does at the very beginning of the trading path. But on the daily time frame, it gives some good signals, and if you trade it only based on principle that you buy when 50 MA is above 200 MA and sell when it's opposite, you'd be rich by now, my friend. I bet. Well, before I show you how you can use the geometry of moving averages, let me quickly show you how it looks like, this funny moving average. So basically I'm on daily Euro-USD chart, and you got the golden cross, you got the death cross. Here's the golden cross. The blue one is 50 moving average, and that one is 225. Is it 50? I'm not sure. It's 50. Yes, it is. And this one is 225 for whatever reason. So when it crosses above, we should only buy. When it crosses below, we should only sell. That's what the classic says. But you know that you might use it in the other way. Let me show you at the very beginning. Sometimes it gives very good signals like this one. When you buy here, for example, and you keep it long enough, is a daily chart, I remind you. So you might get some good couple of pips on that. And in the opposite way, but when you hit it, let's get rid of this bloody text here. So, but look here, when you got this cross and you sell it, it's a ranging market. It's not going anywhere. It's going up and down, and it's really difficult. So in ranging market, it doesn't work. Longer term, when you look at it, look, all time we are in ranging. It's slowly going down, but it takes ages. Probably the swap on Forex would just get your trading account out of the trade. So it looks, but here again is a nice cross, and when you buy here, you may keep it, and we are still going. So the golden cross occurs, look here, it occurs roughly about here. It's 25th of June. So that's why the market started rising. Now it was what it was, and now it's continuing its rally. We don't know when it's gonna be over yet, but what I wanted to show you, I want to show how to use these crosses in finding market geometry or market, how to call it, in the market symmetry. All right, so I've shown you in one of my videos that market symmetry you might get in this way, just getting the rectangle on the first impulse and then multiplying that rectangle, which will give you the potential reversal points. But it's not very precise, basically. And I think much better is to calculate that, which I teach on my private online training sessions. If you want to know details, just find them below this video. You'll find the email and write me an email. But look over here. I got over here daily USD Japanese. It's so it gives really nice signals. Sometimes, not every time. Let's go back somehow. So here is the golden cross. You see, after the golden cross, if you bought it, you would probably lose your money. So it's not that, because the market made a correction, came back, and then when crossed above this 50 MA, simple moving average, started rising. But again, he wasn't sure. So all time here, the market was in uptrend up to here by this rule. So, well, whatever. So when it crossed that, the market decided to go down, and 50 period moving average was the resistance line. Only as soon as it got crossed, the market came back, tried to get out, and again went under both moving averages. Here we got another death cross here, and you see the market didn't go that far. So if you trade it only based on golden cross here, it's a loss. Death cross here, 2/3 of the trend was over already here, and look over here at this area where the cross happened, the market made a correction to reversed. So it's not the way to trade. So anyway, the book I paid 25 quid ages ago, it should be something like 50 or 100 quid these days. It was a waste of money. But there was good investment, because there was a beginning of my learning curve. Then I bought hundreds and hundreds of trading books and PDFs, whatever, online. So, but I want to show you here how you can use these rules of this cross, of death cross and golden cross, to try to forecast what the market is going to do next. I found out that the distance between the crosses is a perfect distance for determining eventual turns of the swings of the market. Let me show you what I mean by that. So let's get a rectangle from here. Somewhere here is that cross. Maybe we should make it thinner to get more precise. Okay, so it's 108 moving average this time. It's okay, but let's make it thinner here. Here we go. So very, very thin line. Now it will be easier to draw precise points. So it's somewhere here. Let me get it here, and let's draw a rectangle here. I used to do rectangles. So we got the rectangle. Now let's try to find a turning point. Does it show any? Would it show anything? What do you think? What I do in this way. I got this, in the distance between these 2 points, I try to find the bottom of the market or the top of the market, just in the middle, just between these 2 points in this period of time. So I got first bottom here. When you project it like this, you can get another bottom here. Look over here. Let's draw a line, okay? So that's the first one. Another bottom we got here. It is the same as a measurement. Let's check it whether it shows something. Actually, it doesn't. But the top, so this is considered the bottom. This was what was that? Was stop losses. Stop loss hunters occurred here. Here's the end of this downtrend. Here was the top, so let's try to project it into the future. Does it work? It does, my friend. It shows another local bottom over here. Look how it is. It shows it's not precise, but nothing is precise in this world. Let's check how is it going further. So from this line we can try again project this rectangle and get another line somewhere here. It's too far. Let's move it a little bit and let's project another one and let's see what's gonna happen. Okay, it's too far. Alright, here we go. Does it show anything? Well, more or less it doesn't at the moment. Nothing is perfect 100%, but if you drag this one from tops and bottoms, it will show you another top here, and when you go further, it should show another swing point somewhere, or this one maybe, because here started the trend. So that's the place. Here was the top of the market. That's the place which shows. As I told you, it's not a precise. Let's try another one. Oh, this one is okay. So let's try this one in the same way. So here, somewhere here is the cross. It's not that precise, but let's look what we can do with that. Here's the top of the market. So from the top, when you drag a line, or from this top when this started to go lower or higher, we got another line. And let's see what the cycle could do with us. This is another one which shows somewhere here. And this is another one. In this way, you can try to do a simple geometry, to find simple geometry of the market. It's not, as I told you, it's not 100%, but it will show you local swings. Obviously, you can find another better ways. You can, for example, calculate like this one, which I told you at the very beginning. So let me show you where it's coming from. This one has been based on this top of 10 of June, and based on this top, it's been calculated all these tops and bottoms, and this is all based. This one is a miss. This is a top, this is a top, a bottom, This is a miss, I may say, and this is a miss, whatever. So I got 10 out of 14, which hit 100%. I don't consider this a miss. There's a correction as well, so it just didn't go that long as it did, and this as well. So anyway, but you can calculate it using some calculating methods. I teach some formulas, much more precise results. You can find this geometric relationship, the future tops and bottoms, by calculating them using the rules of the square of 9, which W.D. Gann applied in his trading methodology. So the results are here and here, as you see, which is, well, basically it's correctly forecasted 10 or 11 or 12 out of 14 tops and bottoms, local tops and bottoms of the market based on the price from January 6. As you see, this is the starting point. So once again, if you want to know how to calculate these dates, you can learn it on my private online mentoring session over the Skype. Under this video, you'll find my contact address, my details. Send me an email for details to learn one of the Gann'S, W.D. Gann's trading secrets. I hope this video helped you somehow and opened your eyes on geometry of the market made manually. Thank you for watching and for your time. I'll see you next time. Take care of yourself and bye-bye.